Good morning, everyone, and welcome to our next presentation of the day. Our presenter for the next presentation is in the building, so we will have it on time start at 11:15 a.m. If you do have any questions, feel free to drop them in the chat, and we will get to them at the end of the presentation. And just bear with us; we'll get started shortly. Hello, everyone. I see we have some more people coming into the room. Our speaker is here, and we will have an on-time start at 11:15. If you have any questions, feel free to drop them in the chat, and we'll get to them at the end of the presentation. All right, hello everybody, and welcome to our next presentation of the Investing in Alternatives Traders Expo. Next up, we have Prince David Balama. He leads the U.S. market expansion for Huawei Technologies as the Senior Vice President, where he works directly with CEOs and senior operators on the gaps between a company's plan and its actual delivery. He spent more than a decade in high growth SaaS, holding roles at early age startups like Meltwater and senior leadership roles at Launch Metrics, Eden Health, and Spring Health. His experience gave him a close view of how fast scaling companies win and where they quietly lose momentum. He co hosts the Execution Gap, which is a podcast on strategy, alignment, and the realities of running an organization through change. Prince David is based in New York. Without further ado, ladies and gentlemen, Prince David Balama. Prince David, the floor is yours.
Thank you so much, Marquise. Thanks everybody for joining. I appreciate you all taking the time. It feels like I'm talking into a void because I can't see all the listeners, but I know that you're here, so I want to thank you for taking the time to join in today. As Marquise had said, the topic of my conversation today is titled "The Execution Gap: How to Spot Companies That Deliver When Everything is Changing." And I really want to, I hope that today we'll be leaving with a lot of tools that can enable everyone on the call, whether you are operators, whether you're CEOs, whether you're investors, whatever aisle that you sit on. My hope is that you go away with something important after this meeting. So I'll dive right into it. So right before I get into the slides, before I get into all the signals, I really wanted to start by confessing something. I've spent the last year sitting across the table from a lot of CEOs, and as a company at Howie Technologies, we've sat with over 500 CEOs over the last 10 years. And somewhere in there, I started to notice a pattern that most of the smartest people in rooms like this one completely miss. It's that it's never the strategy. Every CEO in my meetings that I have has one. Half of them are genuinely brilliant, but it doesn't matter. The strategy is the part that everyone can see. It's in the decks, it's in the earnings calls, it's in the press releases. So everybody automatically prices it in correctly. So throwing this word strategy around a little bit, let's just use a more concrete example. So think about a company that's trying to incorporate AI perhaps into a part of its broader strategic objectives. So, how AI can be used, for example, to gain market share or die, how they can keep up with competitors, launch a new product, or win their must win battles. For those listening on the call today, what you have in your head or what you've discussed with your board or with other sort of executives at the companies that you are at, all the things that need to be done on top of your ongoing business, those represent some of those strategic objectives that you're trying to hit. So that's what the strategy is. Nobody actually prices in the other half, the part that determines, what happens after the strategy is set. And that's what we're actually going to be diving into today. That's the part that's actually going to make or break the number that you're underwriting. So here's what we're going to do today. I'm going to wreck a few things that we've been trained to trust when it comes to, understanding companies that will deliver. And at the end, I'll also hand you 4 questions that you can ask in a single meeting, and read from across the table. So by the time I'm done, you'll have this scorecard for spotting who actually executes and who just might be a pretender in that. All right. So let's dive in. So I wanted to start by something that I've noticed that took me a while to admit out loud. Over the past year, I've sat across the table from a lot of CEOs, like I said, and I've seen a lot of different strategic focuses and pushes. Beautiful strategy, decks that are genuinely impressive, clear thinking, super sharp in their positioning, the kind of plan that you honestly want to back. And here's the part that stuck with me: the most impressive strategy in the room almost never belonged to the company that actually were hitting the numbers. Not sometimes, almost never. These companies delivering had plans that were often plainer, shorter, oftentimes even less polished, but something was happening in the space between the plan and the results, which is what I refer to as the execution gap. And once I started looking for it, I couldn't unsee it, and that gap is what I want to spend the next half hour sort of talking through today, because for this room in particular, it's not necessarily an operating problem alone, it's a pricing problem. And that's what we'll focus on. So, where is all this expertise and data coming from? I'm not pulling from one or two lucky meetings here. We've had versions of this same conversations with over 500 CEOs over the past decade across different, global markets, different industries, sizes, manufacturing, energy, infrastructure, software services, you name it. And what I can tell you is the pattern holds almost every time. The strategy itself is rarely the thing that separates the winners from the ones that stall. So, a question that I kept asking myself was, if it isn't the quality of the plan, then what is it? And more importantly, for those listening on the call, if the plan isn't the signal about whether a company will be successful or not in delivering, what should we actually be looking at when you're trying to judge whether a company is going to deliver or not? Okay. So we'll dive into those, but I just wanted to give you all a bit of a backdrop into where this data is coming from. To further solidify this point, these three numbers really are a North Star for us here at Howie, and also how I approach some of the strategic conversations that I have with our partners. The first is a BCG's 2025 transformation study that, I'm going to phrase it like this. Think about a company that has a $1 billion plan, or a company with roughly $1 billion in EBITDA that has, a transformation or a plan that they're looking to execute. What this first statistic shows us is that there's approximately $740 million worth of missed value, or strategic transformations that fail to create lasting value in the short or the long term. That's an incredible number. The second study is an MIT Sloan 2024 study that showed that only 13% of employees can actually name their company's top 3 priorities. And I can actually attest to this because I've been an employee at different companies for many years. And oftentimes I just didn't know if the daily work that I was doing contributed in a meaningful way to the broader company objectives. So with this statistic, it's a cascading problem. The strategy oftentimes dies in translation. And the final third stat here is from Raineston's classic finding on product launches. It states that a 6-month delay costs roughly a third of a product's lifetime profit. And that's the dollar cost of what we call execution grab. That gap is in the execution, not the strategy. And that's essentially the thesis for the rest of the talk. So if you're listening in and you're a CEO or an investor or somebody who has a direct impact on the bottom line, these stats should scare you, because there has to be a way to spot these ahead of time or change course if your company or others in your portfolio are not on the right path. And that's how I'm going to equip you all today. All right. So here's the reframe that I want everybody on the call to sort of lead with and leave with. And everything else really hangs off of this. A strategy is visible. It's in the deck, it's in the earnings calls, it's in the press releases. Everybody can see it, which means everybody's already pricing it in to how they work and what they do. Execution is different, however. You cannot see that data in the room. Sure, there's metrics to track activity and things like that, but in the 1,000 small choices that nobody puts in a slide, there has to be visibility there, which means that when you back a company, you're really doing 2 things at once. You're paying for a plan, and you're also betting on execution. And almost nobody underwrites the second part. The strategy gets all the due diligence in the world, and the thing that actually determines whether you make money gets a hope and a handshake. And in a stable market, you can sometimes get away with that. But in the kind of current economic and political climate that we're in, it becomes tougher to do that. So if execution is the hidden variable, then the question that matters for this room right now, why does it matter more today than it did 5 years ago? And the answer is that disruption does not create the execution gap. It actually exposes the ones that were already there. Think about it like this. In a stable market, a company with a weak execution culture can coast. Demand is steady, the plans don't change much, and the team that's slow to adapt still mostly lands where it said it will. But the gap still exists. It's just invisible because nothing is really pressure testing it. Now, change the environment Add AI rerouting the whole cost structures of companies across the world, supply chains being rerouted by geopolitical conflicts and political meandering, capital getting more expensive, customer needs shifting under your feet. The plan now has to change every quarter. And the only companies that keep their footing are the ones that can actually move with those changes. For the ones that can't, the gap stops being invisible and it starts to destroy value quietly, quarter over quarter. While the strategy on paper still looks fine, something else starts to happen underneath. And that's your why now. The market that you're investing into is the exact market that also punishes this gap the hardest. So before I give you what to look for, let me clear away what doesn't work. And I'll be very quick with these. These are 5 things that people typically over-index on, and historically what we have seen as signals that show us that a company will deliver. First is CEO charisma. The next is the size of the vision. For the CEO charisma, a compelling founder in the room is not the same as a company that executes. And sometimes it can actually be the opposite, because charisma sometimes can paper over a team that isn't aligned. The size of the vision, big ambition is easy to sell, and it tells you nothing about follow through. So that's something to keep an eye out for. The third is the pace of hiring. Headcount growth often feels like momentum. It's exciting. But a company adding people faster than it can actually focus, I always picture it as a company that is accelerating into that gap and not out of it. Fourth, and this is one that I want you all to sit with, is the thickness of the strategy deck, especially now in the age of AI automation. A 90-page plan from a brand name firm or the most elite AI language models that exist, they might feel like rigor, but in my experience, it's often a substitute for execution, not evidence of it. And the final one is past or previous success as well. So the companies that actually are delivering tend to have a plainer, shorter plan and a much clearer sense of who's doing what and by when. So how can you actually understand, what signals to look out for? Here's where we get practical. I'll give you 4 signals that you can read from the outside or probe any management meeting that you're going to be in going forward. And these will tell you more about whether a company will deliver than the strategy deck ever will. And I want to be clear about where these come from. Like I said, these aren't just hunches. We have had 500 plus conversations with CEOs spanning multiple industries. So these are the 4 signals that you can run in a single meeting. And if you know what you're listening for, you're golden. Okay. First and foremost is focus. And there's actually a test you can run live in any room. Ask 3 different leaders within the organization separately what their top 3 priorities are this year. It sounds super simple, but a company that executes gives you the same short list 3 times and every time. A recent study published by Harvard Business Review titled "Why Strategy Execution Unravels and What to Do About It" actually is a couple of years old at this point. They surveyed 7,000 to 11,000 senior managers across over 400 companies and found that only about a third of them could name their company's top 3 priorities, or even when presented with a list of 5 options, that same number of senior managers couldn't pinpoint what their company's top 3 priorities are at any one time. So a company that's stalling gives you a long wish list of things that sound like a priority but mean nothing. But there's a deeper tell, and that's the one that matters most under pressure. So that's like a metric that you all can uncover in those discussions. Focus is the willingness to leave good ideas on the table, so some of the more critical ones actually get done. Okay, so that's the first part. The signal 2 that I wanted to leave with you all is ownership. Who personally carries the most important strategic bet in the company? And I mean personally, not which department, not which committee. Which human being loses sleep over it? Okay. Here's what I've learned from watching it play out. Strategy itself drifts the moment a CEO delegates it. The second, the most important initiatives gets handed off to a VP or filed under a specific transformation office, it slows down because nobody below the CEO has the authority to keep it ahead of everything else, competing for the same people and the same hours. And the initiatives that actually move are the ones that the CEO is still carrying themselves. So the probe is simple. Ask them to walk you through their most important initiative and who owns it. And also, when did you last review it personally? If the answer is crisp, it means that the execution and the strategy is still alive. But if they have to think about it, it's quietly being eroded, and your plan that you're looking at is already drifting. Okay. Number three, and this is a heavy one, is cadence with a number attached. For this one, you think about two questions. How often does a leadership team actually look at whether execution is on track? And can they tie each initiative to a financial outcome and a date? And I'll make this real. I recently sat with the leadership team of a precision manufacturer company, and also separately with a clean energy developer that was closing on serious financing related goals. Both had genuinely strong strategies, and in both rooms, the same thing was missing. They could not actually measure the product or the progress of their daily cadence. There was no number that they can look at week to week that told them whether things were on track. So nobody actually knew until the quarter closed and the results came in. And by then, the time to course correct had already passed. The gap was live and they were living in it without knowing. So this is a very, very important one. A short and a regular rhythm where every priority metric has a deadline is very telling for delivery. And a single probe that you all on this call that can use to sort of uncover this is ask them how they would know by Q3 or end of the quarter whether their plan is still working. A crisp answer with a number and a date means that they're running an operating system that works, and something vague just tells you that the strategy is living in a document and not actually in their plan. Okay. Signal four, and I would say this one requires the sharpest attention, is the willingness to kill. It sounds, super intense, super aggressive, but the question is just this: what have you stopped doing in the last 12 months? Simply. From our experience, a company that's executing through real change has killed something. A product, a market, an initiative that made sense over a year ago and doesn't anymore. They've made a hard call and moved resources off of it. And that's actually a really good sign. A company that's only adding things that can show you 10 new initiatives and not one of the things that they've actually retired or killed is just accumulating drag. They're slowing down without knowing it. And under disruption that exists in this economic and geopolitical climate, that drag can be fatal because pivot speed is execution. And the cleanest evidence of pivot speed is the body count of dead initiatives. And that's a visual that I would certainly love you all to look out for. So walk into a meeting, walk into a presentation, and you ask, what have you killed recently? That answer tells you whether this company can actually change direction or is just one that keeps piling and adding weight and calling it growth. Okay. So that's the scorecard. Focus, like I said, do they hold a short list and say no to everything else? Ownership, is the CEO still personally carrying the most important and crucial bet for the company? Cadence with a number, can they tell you week by week whether execution is on track and tie it to a financial outcome? And willingness to kill, have they actually retired something in the past year? 4 things, all readable from the outside if you know what to look for, and all probable in a single conversation if you're in a room with the right people. None of them are on the strategy deck, which is the exact point. This is the part that the company doesn't show you or it doesn't come up in the diligence, and is the part that determines whether the plan you're actually betting on ever becomes the result that you're paying for. And here's another uncomfortable turn that I want to take this on. I promised earlier in the call, everything I've given so far is a lens for looking at other companies But I want to challenge you all to actually turn these on yourselves, on your portfolio, on management teams that are sitting across the table from you. What do you do, slightly differently, from some of the focus areas that I've outlined here? Can three of the leaders in your company name the same top three priorities? Is the CEO, if you are a CEO, are you personally carrying the most important and strategic bet for your company? Is there a number that you watch week by week? Have they killed anything real this year? I really want you all to sit in that, because from the experience that we have, the gap itself is invisible from the inside. You're living in it oftentimes without even realizing that this is what's going on. And until someone holds up a mirror, that gap, the distance between what a company believes and what's actually executing on, just continues to grow. And that's the whole game right now. So, getting to the end of my talk for today, the obvious question is, how do you actually find that gap fast without waiting for a bad quarter to reveal it? And that's actually the work that we do at Howie. Shameless plug. I'll show you the shape of it because I think it's useful. Whether or not we talk after this or not, I think these are tools that can help every one of our listeners to really up their game when it comes to identifying companies that can make it in uncertain times. So at Howie, we've taken the same questions, the one that I just walked you through, and built them into a structured diagnostic, and we call it the Howie Growth Assessment. And it's an entryway into one of a kind business critical solution that's built for CEOs. For starters, it does three things. It finds out where your execution gap actually sits. It shows you specifically which areas are driving it so you know where to act first. And it benchmarks your answers against all those 500 plus CEOs that have responded. So a leader doesn't just see your gaps, you actually see where you stand across the entire field. And it does all this in roughly the same amount of time that it takes for you to read a strategy deck anyway. So you cannot lose, essentially. And that's the part that really matters for this room. It's not a 6-month consulting engagement. It's a fast, structured read on the one variable that nobody else is measuring. And for an investor, that's a diligence tool. For a CEO, it's a mirror for what you can actually act on in real time. And I'll leave you with this. Strategy is visible. Execution is the variable that's still mispriced in the room. Execution itself in a market like this is the ability to move, pivot, and change very fast when things are evolving. It's one that's going to separate the companies that deliver from the ones that are just looking good on paper. And that's the edge I want you all to walk out with. The habit of asking not just what's the plan, but who's actually running one is crucial. Connect with me here. And I know we'll have time for some questions after this. And you can also reach out and connect with me on LinkedIn. I can send you a one-page version of this scorecard that we just talked through and the 4 signals. And if you would like to see where your company or one that you care about actually sits is, whether it's in your portfolio or your own company, reach out and we can run a full growth assessment for you guys as well. But that's the real vision of this exercise that I just showed you. Either way, I'm very happy that you all joined in today and gave me a genuine opportunity to walk through this conversation that I think is very important. So thanks again. I'm Prince David Okebalama. I lead the US go-to-market for Howie Technologies. I'm easy to find on LinkedIn under my name, so connect with me, and appreciate the Money Show for putting this together. I've sat through a number of other presentations from speakers over the last day, and it's been fantastic. So thank you all for your time, and happy to take any questions with the last 5 minutes that we have. Marquise?
Awesome. Yes, thank you for that presentation. We do have a few questions. First, someone asked, or they said that you've spoken with more than 500 CEOs. What's one pattern you've observed that surprised you?
Yeah, that's a really, really good question. I think it actually goes back to the first slide that I had. Everybody comes in thinking that what they have on paper is the sort of standard or the expected standard when it comes to their strategic planning. So the CEOs that we speak with often come in with a lot of supreme confidence, as they should, you know. But one of the things that we've realized is if you're a CEO who just feels comfortable delegating, you're leaving a lot on the table because the CEOs that we interact with that have had the most success actually have a system and a solution that helps them drive. Think about this. Financial institutions or finance within organizations have had their own systems for a while. HR has had their tools, sales has had their Salesforce, but the CEO who is responsible for the company's most strategic objectives for years has had to just rely on quarterly review meeting, an email, a discussion by the water cooler, or an Excel file. So we're actually creating a solution that CEOs themselves could continue to drive and really facilitate accelerated and profitable growth at their companies. So good question.
Awesome. We have another question. It says, it seems you could also use this to vet potential private entity and alternative investments before committing. Do you agree?
Absolutely. I think the powerful thing about these focus areas is they apply to a wide range of business scenarios, regardless of where you are. And actually, I've had to turn this mirror on myself when I think about the growth that we're having at our company, which is a private company. I think to myself, okay, can I sit and actually name what our top priorities are? You know, what have I stopped doing over the last couple of years as our team continues to grow and evolve? So absolutely, yes. This can be used in a multitude of sort of business formats, different company sizes, industries, etc. So that's correct.
Perfect. We have two more questions for the next one is for individuals or individual investors who don't have access to institutional research. What's one practical habit they can develop to better assess companies' ability to execute?
Curiosity. I think going into any kind of conversation, even with these four signals that I've presented, already sets you apart because in the years that we've done this, people just don't ask these questions. You know, when last did you walk into a meeting and hear someone ask, what have you killed in the last 12 months? You know, so you don't really require an army of business intelligence consultants to equip you with this. Of course, with AI, we have a lot more visibility into how businesses are performing, et cetera. But what I would recommend is, you know, go in with this battle card with 3 or 4 questions that you feel are relevant to you and feel the confidence in asking them, because the answers will give you a lot more, you know, information than if you just went in thinking that you weren't equipped for it. So good question.
Perfect. And then, oh, it looks like we have, yeah, oh, yep. So the last question for you, and then you're getting some great praise from our chat and said it was a great presentation. But the last question that we have is, how can we reach you to get the one pager?
Oh, very, very good question. So I would recommend if you can find me on LinkedIn. My name is Prince David Okebalama. I know it's a bit of a long name, but it's a quite unique one, so you can't miss me. But also my email address is david.okebalama@howie.io, HOWWE.io. So you can also reach me there, but I would recommend, please just send me a connection request on LinkedIn and, you know, shoot me a message and I can get that over to you and we can continue the conversation from there.
Perfect. Well, Prince David Okebalama, we definitely appreciate your presentation. You had a great presentation and a lot of great insights. So we appreciate you for joining us today. Ladies and gentlemen, we do still have more presentations. So if you are interested in our next presentation, which is understanding the constraints of the global superpowers, make sure that you tune in on that. Otherwise, Prince David, thank you for your time, and we hope that you can join us again in the future.
Thanks, guys. Be well.